At its core, life insurance is really just a promise. But how does that promise actually get kept when it matters the most? Well, today we're going to pull back the curtain on the claims process, the actual steps your family would take to get the financial support you planned for them. And all of this comes from the fantastic work of Dr. Sudhindra S.G., so let's dive in. And this quote right here, it just says it all, doesn't it? You can pay your premiums like clockwork for years, but the real test, the real moment of truth for your policy, is when a claim gets filed. How that process is handled, that defines the actual value of everything you've been paying for. It's literally what the whole thing is for. All right, so here's what we've got on tap. We're going to start by understanding what a claim even is. Then we'll look at the payouts you can get while you're still alive, which might surprise you. From there, we'll cover the final payouts, walk through the death claim process step by step, and wrap up with something super important, your rights as a policyholder.
Okay, first up, let's get right down to the basics. What in the world is a claim? Because it's not just some piece of insurance jargon. It's the trigger. It's the action that sets the entire promise of your policy into motion.
And pay close attention to the language here. A claim is not a polite request. It's a formal demand. It's basically your family saying, hey, a deal's a deal. A promise was made in this contract, and now it's time to honor it. It's a right that is baked into that legal agreement. Now, what's really interesting is that claims aren't a one-size-fits-all thing. They really fall into two main buckets. On one side, you have survival claims. These are benefits that you can actually get paid while you're alive. And on the other side, you've got death claims, which are what we typically think of, the payout that provides security for your loved ones after you're gone. All right, let's talk about something that might actually surprise you. A lot of people think life insurance only pays out when you're, well, not around anymore. But that's not always the case. Many policies are built to give you financial benefits you can use in your own lifetime. So how do you get these benefits while you're alive? Well, it usually comes down to one of three things. First up, you've got survival benefits. Think of those money-back policies that give you chunks of cash at set times. Then there are rider benefits. These are like special add-ons for specific situations, like getting really sick. And last, there's the surrender value. That's the cash you get if you decide, hey, I need to end this policy early. Let's make this real. A money-back policy is a fantastic example. Let's say you're planning for your kid's college education. A policy could be set up to pay out a chunk of money at year 5, another at year 10, and so on. It gives you the funds right when you need them for those big life moments, like admissions fees or tuition, all before the policy even matures. Okay, let's zoom in on those riders for a sec. The best way to think about them is like special upgrades or power-ups for your main policy. A critical illness rider is a perfect example. If you get diagnosed with a serious illness that's covered, the policy pays you a big lump sum of cash, and that money is there to give you breathing room so you can focus on what really matters, your health, instead of worrying about how the bills are going to get paid. All right, so we've talked about the benefits you can see in your lifetime. But what happens at the very end of the policy's road? This is when we talk about the final payouts, which happen either when the policy term ends or in the event of death.
So, if you outlive your policy's term, which is great news, by the way, you get what's called a maturity claim. But what you get back really depends on the flavor of plan you have. With some plans, you get your base amount plus any bonuses. If you have a ULIP that's tied to the market, you get the fund's total value at that time. And with a simple return of premium plan, it's just what it sounds like. You get all your money back.
And this, of course, is the reason most of us get life insurance in the first place, the death claim. It's the payment that goes to the person you named, your nominee. Its whole purpose is to be that financial safety net, to catch your family when they need it the absolute most.
Okay, this next part is really important. Filing a death claim obviously happens at an incredibly tough time for a family, and that's exactly why knowing the process beforehand can make a world of difference. It removes so much of the stress and guesswork. So, what does your family actually have to do? What are the steps? The good news is it's designed to be pretty straightforward, especially when you know what to expect. Honestly, it boils down to 2 key actions. Step 1, your nominee just has to let the insurance company know what happened. Step 2, they submit the necessary paperwork. That's it. Inform and then submit. Simple as that. So, what kind of paperwork are we talking about? Here's the essential checklist. You'll need the official death certificate, the original policy, and a claim form. Depending on the situation, you might also need hospital records or police reports if it was an accident. Pro tip, having these documents in a safe, known place is one of the kindest things you can do for your family. Okay, we've gone through the what and the how. Now, let's get to what I think is the most empowering part of all this,
your rights. The rules that are in place to protect you and make sure the whole process is fair. Okay, I want you to burn a number into your brain. It's just one digit. It's the number 3. And trust me, it's a huge deal for policyholders. So what's so special about 3? It's all about something called the Indisputability Clause from Section 45 of the Insurance Act. Basically, it says that after your policy has been in force for 3 years, the insurer can't fight a claim. Period. They can't question it, they can't deny it based on something you might have missed on your application years ago. It's a rock-solid safety net for you and your family. And that's not all. The regulators have your back too. The insurance regulator, IRDAI, has put strict deadlines in place. Once the paperwork is in, the insurer has 30 days to either pay the claim or give a very good written reason why they're not. And if they drag their feet past that 30-day mark, they have to start paying interest on the claim amount. So they have a real incentive to get it done quickly. So you see, a life insurance policy is so much more than just a sack of paper. It's a promise. And now that you understand how it all works, the different claims, the process, and especially your rights, you're not just someone paying a premium. You're an empowered person who knows exactly how that promise is meant to be kept.